So yes, you know that the U.S. markets, both equities and bonds, may be closed today, but global markets were open and trading, and some regions had very big moves. First of all, China's stock market got a decent boost today. The Shanghai index jumped about 0.8%. Shenzhen, nice move there, up 1.5%. Hong Kong's Hang Seng up 1%. Nikkei 225 in Japan down 1%. Now, if you're looking at the Kospi in South Korea and saying, what the heck happened there? Down 2.33%. A lot of that may be Samsung. We have a big story regarding Samsung that developed overnight. We're going to get that to you in just a minute. But at least the Chinese names were propelled, no doubt, by China reporting solid growth in Q4. GDP for the quarter grew 6.5%. China is the only major economy to log growth in 2020 for the year, growing at 2.3%. Tomorrow, here in the U.S., you got to get ready for this. Major earnings reports. Tech titan Netflix, you could call it a media and streaming titan, reporting after the bell, but well ahead of that, before the bell, we're going to hear from Bank of America, Charles Schwab, Goldman Sachs, and Halliburton. Housing data is also coming out as well, but could Senate hearings to confirm Janet Yellen as the next Treasury Secretary eclipse all of it? I don't know. That's why we turn to our traders, Tom Hayes and Phil Flynn. Okay, you guys are the experts. And Tom, I say that about Janet Yellen because we're already hearing she's going to plant her flag on one particular side regarding the U.S. dollar. So which one will you be watching? How are you positioning yourself tonight ahead of tomorrow's open?
Well, Liz, I think the dollar is extremely important right now. Hedge funds have a record net short in the U.S. dollar, and commercials have been buying the U.S. dollar for the last handful of weeks. Newsflash, the commercials are usually right and the hedge funds are usually wrong. And that could be a short-term headwind for stocks. If we get a counter trend bounce in the dollar, it would be short-term headwind for stocks and also for commodities. So I think, I've been bullish on this market since late March, early April, pretty consistently. And now I think we're probably due for a pause, probably due for a breather, in which case what you're going to see is some of the defensive sectors start to pick up. Maybe you'll see a little bounce in utilities, which have sold off, a little bounce in staples, which have sold off. And I would use any short-term weakness over the next few weeks to add to the reopening trade, which has been so strong in the last 10 weeks, but it's probably due for a little breather. Use that as an opportunity. We're going to just take a rest, and then we'll resume the uptrend later in the year.
Phil, let's be clear about the dollar, because some people say, well, I don't trade in currencies, but you certainly own stocks in your portfolio that could be affected by a dollar that is weaker versus stronger. Janet Yellen, and this is coming out today, is expected to say that the United States does not seek a weaker dollar. Now, what does that mean? That means that products that are made by U.S. companies with a big global footprint might become more expensive if the dollar strengthens. And Donald Trump had gone on and on, done what most presidents have never done, and that is said, we want a weaker dollar. This is the greenback. This is the reserve currency, right? So what stocks are you watching? What sectors? And what do you expect really is going to be the driver here?
Well, first of all, let's talk a little bit about Janet Yellen. I mean, Janet Yellen saying she's for a strong dollar is like me saying I'm on a diet for the new year. We'll see. I say one thing, but sometimes the scale gets the other way, right? Because if you look at Janet Yellen's track record, she hasn't had a strong dollar policy. That's why she has to come out and say it as Treasury Secretary, because her time as a Fed chairman was absolutely the opposite. She was pro-quantitative easing, pro-money printing. So, she has to come and say that to make a stand. So I don't know if it's going to be market moving only because I think she's trying to convince the market, hey, now that I'm Treasury Secretary, I've found religion. I'm for a strong dollar. So I think that's partly it. But you're right. I mean, if the dollar is probably due for a better rebound. I mean, it has been in a free fall. It has been a major boom to a lot of the commodity sectors, the U.S. exporters. And even though we may bounce up a little bit, I still think the dollar is going to be in a weak period. Look what happened in China today. That's incredible. I mean, when you look at their growth, they've been spending a lot of money on manufacturing, infrastructure building. I think that's going to come back to us as well. So, we don't want the dollar to get too strong because we have an awful lot of debt that the government's going to have to pay back for. But, this week earnings, I like Halliburton. I think the worst is over for Halliburton. I think they're going to do very well tomorrow. Even if the numbers miss a little bit, their outlook's going to be a lot brighter. Charles Schwab is looking great right now. Everybody's at home trading. And the banks have been really, really strong. So I think we're going to get some good earnings. I think that's going to give a good boost to the market.
Yeah, pre-market, watch Goldman Sachs. It's up 20% since, year over year. That's a decent move. But considering that, you're looking at some of these names that could really move the sentiment, I think that's crucial. Gentlemen, thank you so much. And by the way, the reason we bring up, as I said, Janet Yellen is